And the point of this video is what's going to happen this summer in Phoenix during the slowest time of our market. So I'm working on another transaction right now where we have a condo that was listed for $280,000 in a community that has an issue with the ability of people to get a loan. Now my particular buyer is buying it as a second home and they're paying cash, so they're still able to buy. But because of that, prices have been reduced. Within the last 12 months, there was a unit in there that was selling for $344,000, and we're getting this property for under $280,000. I can't let you know the price until we close officially. But it's a 2-bed, 1-bath condo with beautiful views of Camelback, and it's right on the golf course in Old Town Scottsdale. So the next thing I want to share with you is the Cromford Market Index. On the Cromford Market Index, they collect all our real estate data in the greater Phoenix area, and then they create charting and reports and all kinds of things. If you look at their chart, 100 is a balanced market between buyers and sellers. You can see when we had the interest rates down in the 3% range, what happened to the economy. You can also see back in the 2007 crash where the Cromford Market Index was around 28. Now the one thing about this chart is the market didn't really bottom in prices at the same time. The market index was at its lowest point, but the actual market didn't bottom out until about right here in 2011, at least in some neighborhoods. Then you can see the frenzy that we had when interest rates were down in the 3% range, where the Cromford Market Index was up at 500. So this was just an out of control time when for every house that came on the market, you had 5 buyers. And at this period, we had people making multiple offers on properties and properties closing and selling. And during this period, it was a frenzy. And as you can see with the market index, demand was outpacing supply substantially by 5 times. Now, look at us right now. We're down right around the mid-70s, high 70s. So that's one of the lowest points we've had. If you cross this line over, going all the way back to the major crash back in 2006. Redfin right here has a prediction that U.S. home prices will dip 1% by the end of 2025. I can already tell you in the Phoenix market, I'm seeing more than 1% discounts during contract negotiations. A lot more. We're seeing up to 10% in a lot of our transactions. And that doesn't mean that's from original list price, that's from the current price that it's on the market for. And let's take a look at this article. U.S. home purchases were canceled at the second highest April rate on record. Now this is nationwide, and that's not going to be specific to Phoenix, but what I will tell you is more people are canceling during the inspection periods than we've had in a long time. The buyers are being very picky, and if the sellers are not willing to negotiate during the inspection period and or do some repairs, then those people are not going to get their home sold, and the home's going to go back on the market. And when the home goes back on the market, you know what's going to happen next? The prices are going to drop even further. When you get a buyer that's willing to buy your property and there's not a lot of contingencies, you're going to have a better option to work with this buyer because they're interested in your home rather than wait for the next buyer to show up. And the point of this video is what's going to happen this summer in Phoenix during the slowest time of our market. That's when we're really going to find out what this market's all about. Thanks for watching today. Take a look at some of our other videos. Have a great day.